You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mike Yahoo. Hey, what's up, Market Moose? Mike from The Moose on the Loose. Happy Thursday. Today, we are going to look at Power Corporation versus Great-West Lifeco. So, should you own Power Corp, Great-West Life, or both? So, let's get started with the returns, and then we're going to look at the playbook, growth vector, and economic mode for both of them, and then I'm going to tell you what I think is the best play here. So, in terms of returns, both companies have like a very similar path actually. Right now, the yield for Power Corporation is around 4.55, Great-West Life around 4.75, so slightly more generous for Great-West Life, but not that much. And in terms of returns, over the past 12 months, we have Power Corp that did a lot better than Great-West Life, so 48% versus 37. But then if you look at a little longer, and this is why it's so important to look at like different time frame when you want to compare returns. Well, the 3 years makes 90% for Power Corp, 92 for Great-West. The 5 year is 188 for Power Corp, 176 for Great-West, so still over 5 years, almost identical. And then over the past 10 years, you have 179% for Power Corp versus only 127% for Great-West Life. So really depending on the moment you look at, you're going to have either two companies that have about the same returns, but for a few periods, Power Corp is a lot better. So overall, already when you're looking back, you may be tempted to say, well, I'm going to own Power Corp. It's a better like performing stocks, but that was the past, right? What's going to happen in the future is like nothing linked to what we just discussed already. I just want to set the table already. So let's talk about Power Corp for a second. So the playbook for Power Corp, well, it's a holding company. So it's a company of companies. The company owns about 68% of Great-West Life. So that's why there's an obvious link here. It's like 2/3 owned by Power Corp. It owns also 62% of IGM Financial, previously known as Investors Group. So a bunch of financial planners doing financial plans, of course, and operating into wealth management. And 85% of their assets, of Power Corp's assets, are linked to either Great-West Life or IGM. So it's literally a model where it owns several companies, but the nerve here is to generate a lot of recurring fees on assets under management. The company also invests through Sagard into alternative assets, such as like what Brookfield does. So long-term patient capital through Sagard, and they have also minority stake into Wealthsimple. I mean, you know that for sure, and China AMC. In terms of growth vectors, how Power Corp can grow, well, it counts a lot on the expansion of Great-West Life and IGM. So for Great-West Life, we're talking about mostly increasing their presence in the US. We're going to talk a little bit more about Great-West Life in a second, and it's actually their biggest growth vector for Power Corp. IGM, yes, it can grow their assets under management, but I have some reserve. I'm not too sure like how they can be as profitable as their original business model was to charge super high fees on mutual funds. Definitely, this is not a growing trend, quite the opposite these days. So I'm wondering how IGM will be able to grow, considering that most of their products needs to be modified to offer like a good return, but also lower fees. And finally, Power Corp can also grow by acquisition through its, playbook of being a company of companies, right? In terms of economic moat, they own stake in leaders in markets, so they benefit from brand recognition. But besides that, there's not that much of a moat here. They're like very solid businesses generating tons of cash flow, but it's not necessarily something that another business cannot do either. So now let's move on to Great-West. So Great-West, the playbook, life insurance company that learn to diversify its business after the financial crisis. So they worked harder to diversification. So now it's not only a life insurance business, but they also offer a lot of like wealth management products. They manage over 3 trillion in assets under management. They also offer pension and retirement services. So it's all about investing in insurance products for Great-West Life at this point. In terms of growth vectors, well, they benefit from a good expansion in the U.S. in the retirement service providing segment with Empower. So that is a growing segment. Another growing segment for Great-West is the reinsurance business, particularly in Japan. So that part is going well. And of course, they count on a large amount of recurring fees being charged on their assets as a great source of income, a great source of cash flow to fuel more deals and to fuel more expansion. In terms of economic moat, well, there's not that much here. Well, life insurance, annuities, it's all commodities, right? When you're shopping for life insurance, once the basic criterion of like safety and then notoriety have been met, you're going to go for the cheapest one. So there's a lot of pressure there. Same thing for annuity. You want to have the annuity that will pay you the most without taking like risk that like the company is not insured. But I mean, when you're thinking about Great-West Life or Sun Life or Manulife, you will be completely indifferent in the logo on your statement as long as you get the best deal. So not much of an economic moat here, but they do enjoy some solid brand recognition. They have like scale and distribution that helps them a little bit. But again, not a super moaty business. There's not much that differentiate Great-West Life to Sun Life or Manulife actually in terms of like what they can offer. So when you think about that, Great-West Life is like the best assets owned by Power Corporation, but Power Corporation ended up generating better returns over time. So it's kind of like putting you in between a rock and a hard place. Like, should you have both? Maybe before I tell you my thought on this, I want you to download the Dividend Income for Life guide. That guide will help you shape your investment thesis and understand what is best for you and your portfolio, which kind of stock that you should own. And you will be surprised that having a balance between those great yielders, such as Power Corporation and Great-West Life at 4 or 5% yield, but also including low yield, high growth stocks, will not only give you better returns, but will ensure higher income at retirement. I know it's super counterintuitive, but if you have higher returns, you are in a better position to generate higher returns, higher income, and you will get a better retirement. So you can download that guide at moosemarkets.com/income. So moosemarkets.com/income for the Dividend Income for Life guide. All right, so back to Power Corp versus Great-West. Well, when I look at the dividend triangle before I make my final decision, well, the stats are about the same. Earnings per share growth about 10-11% over the past 5 years for both. High single-digit dividend growth. The payout ratio is about 50%. So not much in the numbers will help me make a difference here. So since the numbers are about the same, I would say you cannot really go wrong if you select Power Corp or Great-West Life. One thing I would like to mention, though, is over the past few months, Power Corp has been definitely on a strong uptrend while Great-West Life has been stagnant. That explains a little bit more about the difference in performance over the past 1 year. So I would not put too much weight onto that in my decision. Personally, I prefer the life insurance business because it is more established, it generates strong cash flow, and let's be honest, it's the best Power Corporation assets they have. So instead of like, and I have like a little bit of a problem with the growth perspective of IGM. So far, they have not been doing bad. It's more like a perception and a personal preference. So I'm not saying that I'm right here, definitely not. But it's all about when you invest in stocks, it's all about conviction, right? So I would have more conviction in Great-West Life than into Power Corp. mind you, both companies, in my opinion, are very strong, kind of like Deluxe Bond like type of companies. They should not let you down. If you have Power Corp and Great-West Life, there's a little bit of duplication here. Not the end of the world, but you're not adding that much more by having both in your portfolio in terms of diversification for sure. All right, Moose, that's enough for today. Do not forget to download the Dividend Income for Life guide at moosemarkets.com/income. And tomorrow we're going to talk about what does the first year of retirement look like. All right, stay tuned and stay invested. Hey, welcome to the disclaimer. If you're listening to The Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.